Hey, welcome back. It's Jeremy with another video. Today is actually Sunday, March 26th. Um, I guess this will be a little bit of a forecasting video. Tried to actually get this recorded and done yesterday, but didn't really work out. Right now, I'm kind of toiling around in with Ethereum and USD. Actually, this is the other reason why I said I kind of wanted to do this yesterday. Just jumped into a 5 minute and just took a look at just the structural narrative, and as you can see, this is kind of playing out. I got in up here, targeted this zone, saying basically this would be like my invalidation. If price got below this, then really wasn't going to be interested. So looking to see if it delivers basically back to this most recent high on the 5 minute. Excuse me, but other than that, I will probably post in the community. I'm just gonna take a look at Bitcoin. I don't trade Bitcoin. Every now and again, I take that back. Every now and again, I'll take like a small position on it just to see if it's moving based on what I think the structural bias is. And I mean, if it does, great. If it doesn't, no big deal. So what we're gonna do is just look at the two markets that two of the three that I kind of been focused on the last, I'd say, week and a half, 2 weeks. One is going to be Kiwi dollar or NZD USD, and then the other will be Euro USD, which a lot of you may or may not know. For a long time, I stayed away from, thinking that because it's the most traded, it potentially is also one of the most manipulated, just depending upon what powers of interest, what composite operators are looking to do. So that being the case, just a simple structural outlook here on the 5 minute. We were looking at some bullish price action, still bullish. Actually, looking at two prospects. I just want to look over here, make sure that my head is not in the way. Okay, so this will work. So I'll pinch this just a little bit so we can still see. You can still see. Okay, great. I'm gonna just make this bigger so you can see that there's actually a line up here because the rendering isn't as great. I know you cannot exactly see the price, but at least you'll see price points and so on and so forth. So basically, what we're looking at here, what I'm looking at is I'm looking for the bullish to continue. I mean, the long story short, the narrative for me is bullish on the five. It's remained bullish. We had basically just a retracement back into this area after this small mitigation, which is very small. So while it broke previous market break structure, it maintained the overall bullish intent, right? So essentially, what I was looking at when I got to this structure point was I just kind of looked back here. So I kind of fine tuned myself a little bit and said, you know, self, if we're looking, excuse me, you're looking at this break above, we'd obviously be looking at this low down here. Well, we had that break up, price came back in, tapped into here, and then it turned around and it broke above the previous highs. So here's another market break that's really from this hodgepodge of mitigation right in this area. So rather than go back to the previous, I took the most recent low, which was here. So this is basically my 50. This is the high or the long that I'm looking to target. Price, as we can see, between Thursday and Friday of this past week, I know that there was some economic news down here that basically talks about Australian dollar struggles as market reverses course on rates. As we know, there was, I think it was a what was it, a 0.5% increase, like the Fed decided that they were going to increase rates. So because, without making this video too long, we know that there's been inflation and interest rate concerns with the Australian dollar and the Kiwi, right? New Zealand dollar. There's been that concern, and then you have what's going on in the U.S. with the Fed, and are they going to continue to relax and cut? Are they going to do some other things? So, in the interest of all things, know what in the hell it is. Been having issues with spiders, and that kind of look like a spider. Um, in the interest of all of these other things, there is like this growing concern that what's going to take priority or which one is going to dominate, right? So my bias is going to continue to be my bias, which is the interest rate. And and let me say before I say anything else, I don't base my positions and my bias on any kind of fundamental sentiment. I just look at what the potential move is going to be, and a lot of times I filter in whatever that sentiment is that's going to be like the catalyst for the continuation or the reversal of a move. So in my mind, I've already looked at this potential high being taken out. The catalyst essentially for this is going to be the Fed raised interest rates. They didn't relax, which ultimately means that there's not going to be that much confidence in the US dollar as opposed to the Kiwi in relationship to this market. It just essentially means that the Kiwi may very well win out. So, and win out just in the terms of structural delivery. I'm not talking about overall and where they stand within the global markets currency wise. However, within this bias, I'm essentially looking at, very very simply, this would have been the entry because this is the 50. If I'm just going to be honest about it, the RR not that great, not that great at all. It's a 1.15 to 1 if you were risking 1%, but essentially that's what it would be. If price, let me get rid of this real quick. If price decides that it is going to invalidate, if you will, the invalidation point is not this low. It would actually be. I need to keep that because I had that on for something. Let me just draw another horizontal line for you. I'll make this one thicker. Okay. I think you can see that. Yep, you can see that. So basically, this would be my zone invalidation, but in terms of bias, this would be my invalidation. So even if price opens later today in a few hours, and it takes me out here short because I'm in my funded account, I'm in this trade with my Samuel and Co. Live funding account. I'm actually in this position. So if it's to take me out here, no harm, no foul, no big deal. What I'll understand is there's a potential mitigation that takes place down here before continuation, or I just got to sit on my hands for 2-3 days until about late Tuesday, Wednesday, until there's actually the resumption in the move, or there is a reversal, or it just continues to mitigate sideways to gather, entertain more liquidity to either run long or short. That's the crux of this market, right? So that is that's that. Same kind of thing going on here with Euro USD. So 5 minute, my head's in the way, yeah? Yeah, my head's in the way. All right, so we had quite a bit going on here, and the kicker and the issue with Euro USD is while price has been moving bullish, it's technically moving bullish back into a potential supply zone. Potential, because we don't know until it gets there. So in a lot of my previous videos and other videos that I make, I always tell you context, right? So overall the market is bearish. However, for a short period of time now, the market has been bullish only basically in mitigation and a certain level of retracement. So there is some significant weak to strong transfer of orders taking place at certain levels. So right now we're kind of in one of those places where I am still bullish within a position on Euro USD. We have seen some level of retracement in here. So again, the long and short story is quite simply this was only going to be relevant in relationship to looking at whether or not this high was going to be taken out, which it was. This is more or less the revision of that for me. So, still looking for a continuation long. If you're just looking at this market for the first time, well, let me back this out. And, well, actually, let me just do it this way for you. What you could, not financial advice, just again, just a possibility, just a concept, okay, just a concept. And you could ultimately also see that it's kind of already tapped into that place, okay. Yes, it is hindsight. Yes, I realize it's hindsight, but be that as it may. So here's the idea. Okay, I'm just gonna mark this out. And again, yeah, hindsight, call it whatever you want, but it's practical application at this point. So what I'm doing basically is showing you where price came back into, where it can move from. If I can get that to line up, great. Now we're gonna pull this all the way across. All right, and yeah, we'll stay in here because that's basically the center, so that'll work out. Okay, so here's the logic behind this. Yes, there was a bigger market break back here, but you can see that there was a structural breakdown back here, right? So once you have a structural breakdown from a bullish, it's kind of like it renders it invalid. Okay. Don't want to go into too much detail with that. One day maybe I'll have like I'll actually do a some sort of a live stream, which I've been contemplating on whether or not or how I do that. Like I said, I'm a firm believer that trading is independent. We can all kind of get together and we could talk about certain things, but then it reaches a point in the process where what I see, we'll always agree to disagree or see things differently, which is great. Actually, I don't have a problem. I don't see any negative thing with that. But there's not a one surefire set way of doing anything, as you know. So I looked at this back here as just basically an invalidation from this high. So I kept it on because I wanted to see. Essentially, I didn't move my stop to break even. I didn't do any of that from the original position that I was in. I just allowed the market to continue to move bullish until certain criteria within my trading plan were met. Okay, I'm still at that place even between Thursday and Friday with the retracement or the pullback short. I didn't change anything. I remained in my position. However, if you are somebody that is looking at maybe an idea, again, don't sue me, not financial advice, but if you're looking for an idea of this continuation, the potential continuation of EU long, what you could have looked for if you were saying, okay, this is invalid. There are multiple breaks of structure back here. I know you can't see it, so let me just pull this over so you can see it. Okay. Again, full transparency. I have nothing to hide. If you look right back here, okay, and you follow my horizontal across, and maybe you can or you cannot see it, but I'm gonna move this to here. There's a mitigation that takes place in this area, which is basically like a wick mitigation, which could be absorption, and it could be treated as such. Okay, and the reason it could be treated as such is you've got multiple breaks of structure here with this motive move here. So it's basically a move back in. It basically takes the liquidity from the low back here. It literally wicks through and it continues up. So you can look at that one or two ways. The way I looked at it is I said, okay, this was all short, so because you've invalidated all of this, I'm literally just going to be looking for the next break above this level, which is why I left this box, right? I left it. And I also said to myself, I've been into this long for 2 weeks, 3 weeks, almost 2.5 weeks. So from my perspective personally and from my position entry, I I've not been really worried about going into any level of drawdown or anything like that because I was in early enough. So it was more or less just managing the position and taking whatever risk off the table. Once I saw this break, I was okay. If it's, if this is your first time looking at EU, don't trade it, don't know. I'm just going to simply say an idea that you could look at is what's happened here based on this high being taken. Because this high was taken from where? Right here. But you could take this level, or if you really wanted to, just in case you were just trying to, again, mitigate some level of risk. I can do this because it's literally at that level. You could have taken this here, and it still would have tapped you in, would have given you, 50, and it would have at least delivered back to this high. Why am I showing you, excuse me, showing you this, and why is it important? Why would you say it's important? Well, for starters, it's showing a potential continuation. Okay, I'm pulling this down so you can see everything. It's made a high here. So even on a 5 minute, if you're not targeting, some ridiculous high or, what have you, it set this high on Thursday. You can see that. Great. Price came back in, and again, we were looking for. It broke this high. Where did that come from? It came from here, but ultimately it came from this previous high. So either one of these, it doesn't matter. Your RR obviously is going to be a little bit better based on the spread. That will actually be better, just depending on where you get in and where you get out. So we can all see. I'm just sliding this over so you can see. Price came back, tapped into this last area before price broke above, right? And now it looks like it's going to deliver long. Well, here's something that, just looking at the structural delivery here, here's something that you're going to have to know going into this week. And again, I would say anybody that's not in this market, again, test it. Go into a paper trade account, make yourself a demo account, whatever it is, and just test it out. And either it will play out or it won't. And that's the nature of our business. However, high probability would tell me that if I got in, or if I was looking to still get in, you could probably still wait potentially. But I just put my stop here, and I'd literally target this high. That's a 13.3 to 1 if you're risking 1%. It's a ridiculously looking trade. And there are some that will look at this and then they may watch this video and they may comment, horseshit. There's no fucking way in the world that's happening. At a 13 to what are you, crazy? But my point is, if, if, if you would have seen the possibility back here and said, hey, it's going to tap back in, and this is why they say horseshit, is because they're going to say, well, it's hindsight. So how would I know that? Because you're doing this in hindsight. Or you're looking at it as a structural delivery. I don't use the term. Some people utilize the term of an exhaustion point. I don't think that it's that. I think there are levels in which profit taking is more probabilistic than other levels. So there's some level of profit taking, but there's also that, again, the weak to strong, that the conversion and the creation of liquidity, where you could afford to give a pause in price in a given direction, mitigate those orders, accumulate your liquidity, and accumulate your cash, or a certain amount of market dominance, if you will, that allows you to now deliver and drive price in the direction that you want to drive it in. So I think 109 was that level last week. I see that the mitigation back into the 107s, maybe a little bit more even at the beginning of this week. Let's see if I could see something in here that I could share. I did say I didn't want this to go too long, and we're at about 20 minutes right now, so I'll try to be quick. That's a wick mitigation, so you could actually see something along the lines of, let's see, because there are quite a few people that will look at this structural point and say, okay, well, this was a delivery short, didn't tap back in, and technically it hasn't. So what we may see at the beginning here at market open today, you may see either a gap up or price may pop into this area For those of you that don't know what I'm talking about, I'm just going to draw a quick box here. I will delete it just so for the purpose of explaining. So someone or a group of retail will look at that and say that's a supply. They would not be incorrect. It is essentially a supply. It is a point where there was a weak to strong hand delivery. So that did occur back here. That is what that is. You have one up here as well. But if you're looking at recent structure, you're looking at recent zones, yeah, it would make total sense. So I would probably just look and see how this mitigates. There might be another possibility here short. If I were looking, which I am not, like I said, I'm already in longs from here, I would probably be looking at this area right here. If it were me and that's what I was looking for, if I was not in a move. Just my personal opinion, and the reason and the logic behind why, if you're saying, well, why would you be looking for long if you're saying that the recent zone is short and blah blah blah, because the overall context of this market, the institutional delivery of this market overall bearish, yes. In the context of mitigating orders to continue short, it's bullish. There is a chance of trading and moving against a trending dominant market. There is. However, if the context is correct, and this is one of the reasons why you look for multiple confluences, or you look for areas that show you what the potential of price is, you just allow, sometimes let the move happen. You don't necessarily have to be a part of it. Like this, for instance, this is why I said it could be an idea. Not financial advice, don't sue me. That's why I said it could be an idea. You can allow the market to do what it's going to do, especially today, and I would say for the first part of tomorrow, for the first part of Monday. Because while you could guess and be right and get a tremendous move today, or even going into pre-London prior to tomorrow, you could potentially run a 5 RR or 7 RR trade, but that might be at the expense of maybe a 10 RR or 20 RR, with taking profit in between, which might still yield you, who knows, a 5 or a 7. It just depends. But at least you might accumulate the 5, and then you have the rest of it running risk free, and with the potential to make more without scaling in, you're already there. Here, this could be a situation where, like I said, price could gap up, tap into this intermediary supply. It could then run short. It could take out basically the 50 of this MB, this market break up, because that's a market break long, doesn't come back and tap the 50 into this area, and then it could mitigate in here. It could even absorb this wick low, maintain this low, and continue to push off. Because yes, again, the market, this structure on the 5 minute is bearish, 100%. 100%. However, the interstructure, the fluff as it's sometimes referred to, the interstructure shows me 1 market break up, 2 market break up, 3 market break up, 4 market breaks up. So I'll give you a little. It's not really a secret, but I'll give you something that just watching price, as I've said also in previous videos, watching price time after time after time again. There's something that sometimes happens more often than not after you get 4 market breaks long or 4 market breaks short. A lot of times what happens is the market will tend to mitigate or reverse back into the original market break structure in that direction. So after 4 market breaks, typically you will see either some sideways or what's called consolidation, but the interterm liquidity, you'll see basically a grab or a wick up or a wick below, depending on the market, and then it goes back in the opposite direction, back into that original market break, where sometimes it will be self-contained within the original break and continue in the given direction, or sometimes it will absorb and continue in that direction. And then other times, obviously, we know what happens. It could absorb, it'll mitigate, it'll make a intermediary high, and it will completely reverse. So there are a lot of different things that can happen. The overall idea to convey, the overall concept to get across is Let price show you what it's going to do. Let the market show you. As long as you have a couple of ideas of what could happen in certain areas, and then you just watch and you wait. Because at the end of the day, as I said, we could all guess if you want to, be in. I used to be one of those people on Sunday, can't come analyze, say this is exactly what's going to happen. I'd be, sitting here not with my wheel or anything in front of me, but I'd be licking my chops, rubbing my hands together like, today's going to be that day. Market's going to the moon, and guess what? The market would open at 5. It would start to go to the moon. I'd be like, yes, be in. And because I didn't understand risk management, and I also didn't understand the levels at which price was going to be mitigated, or there was profit taken, or whatever it was, that going to the moon would end up quickly right back here on Earth. So because I wouldn't allow the market to warm up to show me what it wanted to do. There are certain things that are going to take place after market close on Friday, that cause a lot of times the gaps, the spikes that occur at market open on Sunday, and you need to kind of flesh those things out. A lot of people look at, well, if the market closed on Friday and it was bullish, then when it opens Sunday, it most definitely has to continue bullish. Well, yes and no. It could continue for a moment, but as I said, another little snippet and nugget for you. We don't know what happens in that 30 to 45 minutes or the hour after the market closes on Friday. You have no idea what happens pre-market before the market opens, and what orders from a composite perspective have been moved or shifted that cause the spikes, that cause the gaps, that cause in some cases the continuations initially, which ultimately turn into reversals. So it's always good to just be mindful, unless you're already in a position and you've got a fair amount of risk management on your side, or you've got a fair amount of profit already on the table and you're break even. It's good just to kind of sit, wait, watch, allow what's going to happen. And then even I would say for the first 2 hours within Asian session on Sunday, just watch and see. But kind of getting back to this, and then I'm gonna let you guys go. Potential gap up into this initial intermediary supply, potential reversal back into intermediary demand zone, which let's just revise this, since I don't want to make it seem like somebody's like, oh, it's not a 1 to 13, and then we'll just move this not below here, but maybe below this wick low, which is basically the low. So then that will make this, what will that make this now? A respectable 8.68 to 1. That's respectable. So still a good 8% potentially for somebody. Do the math if you do a half. Do the math if you do 1/4%. That's still a good mover for even a 1/4%. So, but that's gonna be it for today. Leave a like, comment, subscribe to the channel. Give me some ideas on what you'd like to see for maybe a live trading account. I'm thinking maybe this Wednesday I might do something live. Not 100% sure. Maybe throw on some music. I might sit here and look crazy and trade live with you guys. So just give me some ideas and let me know. Until the next time, wish you guys a happy trading week, positive trading week. Hope everybody, makes some good money, and also just, reinvest in yourself and your trading plans, because as long as you're working towards that objective and that goal of profitability, but bigger than the profitability, you're looking at being consistent and following a trade plan. No matter what, you'll get to the end, and you'll get there successfully. All right. So you guys take care. I'll see you soon.